Top 7 Best Long-Term Stocks to Buy Now. Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll dive into the top 7 best long-term stocks to buy now. So before we start, we kindly ask that you like this video and subscribe to our channel for weekly updates. Let's get started. Navigating the complexities of today's world, marked by pandemics and geopolitical uncertainties, makes predicting the future a daunting task, whether it's for 2024, 2025, or beyond 2035. In the face of these uncertainties, investment research offers a compelling perspective: the adoption of a buy-and-hold strategy. Contrary to frequent trading, this approach has the potential to yield greater long-term rewards. Active trading, with its inherent costs and the risks associated with timing the market accurately, often undermines the potential short-term gains from correct predictions. Recognizing this, investors are turning towards a more resilient and steady approach. Amidst the volatility, 7 carefully chosen stocks stand out as beacons of stability, representing well-established companies. The following 7 picks highlight well-established companies that not only pay dividends, but also exhibit resilience, likely to endure whatever challenges come their way. Number 1. Apple Incorporated. Apple, a tech behemoth, stands tall as the largest stock listed on U.S. exchanges, overshadowing its counterparts in the ever-evolving landscape of Wall Street's technology stocks. The sheer magnitude of Apple's influence is staggering, with its market presence exponentially surpassing that of its peers. Looking into the future, Apple projects a formidable $420 billion in revenue for the upcoming year, underscoring its financial prowess. Notably, the company currently boasts a substantial reserve, holding over $60 billion in cash and marketable securities. This financial stability positions Apple not just as a tech giant, but as a financial juggernaut capable of weathering economic uncertainties. Central to Apple's dominance is the iconic iPhone, a technological marvel that has propelled the company into possessing one of the most valuable brands globally. The widespread popularity and recognition of the iPhone contributes significantly to Apple's allure, establishing it as a symbol of innovation and consumer preference. Considering the scale of its operations and the brand equity it commands, the prospect of Apple maintaining its dominance in the years to come seems almost inevitable. The company's strategic foresight and ability to adapt to market demands further solidify its position as a long-term player in the tech industry. Beyond its financials and iconic products, Apple benefits from a structural advantage in the investment landscape. Many investment funds prioritize allocating their assets to the largest stocks first, and Apple, as the pinnacle of market capitalization, becomes a natural choice. This structural inclination ensures a continuous inflow of institutional money into Apple, adding another layer of support to its long-term stability and growth. In conclusion, Apple's unparalleled scale, financial resilience, iconic products, and structural advantages in the investment landscape collectively make it a formidable force. For investors seeking a blend of innovation, financial strength, and enduring market dominance, Apple's stock appears poised to remain a compelling choice for the foreseeable future. Number 2. Consolidated Edison Incorporated. Utility stocks are generally a great sector to consider for long-term investing, given that electricity is a necessity. The infrastructure is expensive for new entrants to build out, and the industry is highly regulated and controlled. Con Ed is a great example of a utility stock with a wide moat to fend off competition. Distributing electricity to about 3.5 million customers in the New York City area, and natural gas to 1.1 million more. The company just notched its 50th year of consecutive dividend increases, proving a long-term commitment to sharing its success with shareholders. There may not be a ton of growth in the utilities sector, but there is definitely stability. That's what makes ED appealing as a buy-and-hold investment. Number 3. Johnson & Johnson. Johnson & Johnson, a stalwart in the healthcare sector, stands as one of the largest and most venerable stocks, boasting a rich legacy spanning over 135 years. Its enduring presence in the industry is further underscored by holding one of the world's best credit ratings, a testament to its financial stability and reliability. From a dividend perspective, Johnson & Johnson is not just a healthcare giant, it is a dividend aristocrat. The company has consistently raised its payouts for an impressive 61 consecutive years, marking one of the longest and most enviable track records on Wall Street. This remarkable dividend history positions Johnson & Johnson as a reliable income generator, attracting investors seeking both stability and consistent returns. In a strategic move a few months ago, Johnson & Johnson made headlines by spinning off its consumer health business, which includes iconic brands like Tylenol and Band-Aid. This move was aimed at sharpening the company's focus and generating capital to fuel its ambitious merger and acquisition endeavors. The CFO's description of their appetite for mergers and acquisitions as voracious signals a bold and forward-thinking approach, aligning with the company's commitment to future growth. With its current scale and ambitious plans, Johnson & Johnson emerges as a compelling long-term investment to watch. The company's commitment to innovation, financial strength, and strategic maneuvers in refining its business focus positions it as a dynamic player in the ever-evolving landscape of the healthcare industry. For investors seeking a blend of stability, consistent dividends, and growth potential, Johnson & Johnson presents itself as a noteworthy candidate for inclusion in a resilient and forward-looking investment portfolio. Number 4. JPMorgan Chase & Company. JPMorgan Chase, a financial juggernaut, has consistently stood at the forefront of the banking industry, boasting a legacy of leadership and resilience. Notably, it made history by becoming the first major financial institution in the U.S. to surpass its pre-financial crisis dividend levels, showcasing its robust financial recovery. During the turbulent times of the financial crisis, JPMorgan Chase strategically capitalized on opportunities, making astute bargain purchases of Bear Stearns and Washington Mutual. This calculated move not only helped it weather the storm, but also positioned the bank on a trajectory of unprecedented strength on the other side of the crisis. The bank's commendable track record persisted with its recent acquisition of First Republic, a strategic move made in the aftermath of the bank's failure in early 2023, amid the volatility associated with interest rate changes. This strategic maneuver not only highlighted JPMorgan Chase's agility in navigating financial landscapes, but also underscored its commitment to adaptability and growth. With roots tracing back to 1799, JPMorgan Chase has evolved into the largest U.S. bank by assets, a testament to its strategic decisions and forward-thinking approach. For investors with a long-term perspective seeking stable income, JPMorgan Chase presents itself as a compelling choice. Its enduring legacy, coupled with a history of prudent acquisitions, positions it as a formidable force in the financial realm, making it worthy of consideration for those looking to build a resilient and income-generating portfolio. Number 5. Prologis Incorporated. Prologis, a global real estate powerhouse, extends its influence across a vast expanse of 19 countries. However, it distinguishes itself from traditional residential or office property companies by specializing in the ownership and operation of industrial parks, particularly focusing on logistics and warehouse facilities. This strategic positioning has propelled Prologis into a league of its own within the real estate sector. At the helm of its clientele are industry giants such as Amazon.com Inc. and FedEx Corp., underscoring the company's significance in facilitating the logistics and distribution networks of major players. Beyond these key partnerships, Prologis boasts a diverse portfolio catering to approximately 6,600 customers, collectively leasing an impressive 1.2 billion square feet of space. This vast and varied portfolio solidifies Prologis standing as a pivotal player in the global real estate landscape. Prologis emerges as a beacon of stability and resilience in an era where e-commerce and the requirement of just-in-time delivery are the norm. Its scale of operations is not just significant, it is dominant. The company's business model, akin to a fortress, stands as a testament to its adaptability and foresight in aligning with the evolving demands of the modern marketplace. Crucially, Prologis distinguishes itself not only through its operational prowess, but also as a dividend-paying real estate firm. This characteristic makes it an attractive prospect for long-term investors seeking not just stability, but a steady income stream. In essence, Prologis positions itself as a compelling choice for those looking to navigate the real estate market with a forward-thinking approach, backed by a robust business model and a track record of success in the dynamic landscape of global commerce. Number 6. Verizon Communications Incorporated. Verizon, hailed as the Telecom king, currently reigns supreme as the leading wireless carrier in America, boasting an expansive customer base exceeding 104 million, surpassing competitors like T-Mobile US Incorporated with just over 110 million customers, and AT&T Incorporated with approximately 100 million customers. In the fast-paced realm of telecommunications, Verizon has carved out its dominance, positioning itself as an unrivaled force in providing essential mobile connectivity. In an age where seamless mobile connectivity is deemed indispensable for both consumers and businesses, Verizon stands out as a reliable and secure long-term investment. The sheer magnitude of its subscriber base underscores the fundamental role it plays in meeting the communication needs of a vast and diverse population. What further solidifies Verizon's appeal is its remarkable dividend yield, nearly 5 times that of the typical S&P 500 stock. Customers consistently remit monthly payments like clockwork, which underpins this financial strength. This predictable revenue stream not only reflects the company's resilience, but also positions it as an attractive option for investors seeking stability and income over the long haul. In essence, investing in Verizon transcends mere participation in the telecom industry. It represents a strategic alignment with a market leader that not only navigates the evolving landscape of mobile connectivity, but also rewards investors with a substantial dividend. For those looking for a combination of reliability, market dominance, and attractive returns, holding Verizon stock for the long term appears to be a prudent and promising decision. Number 7. Williams Companies Incorporated. It's no easy task to identify energy stocks with staying power in this age of climate change. But midstream energy stock Williams is perhaps more noteworthy than the other multinational big oil leaders out there because its unique business model leaves it relatively insulated from the ups and downs of commodity prices. As an energy infrastructure company, it operates more than 33,000 miles of pipelines, 29 processing facilities, and about 24 million barrels of storage capacity. This more consistent focus on the energy sector makes it a more reliable dividend payer and a safer long-term bet than smaller and more aggressive stocks in the industry. The future may be uncertain, but a strategic and patient investment approach focused on enduring companies can provide a sense of stability and potentially lucrative returns. As we look ahead to the years to come, these top 7 long-term stocks present themselves as promising candidates for those seeking to build a robust and resilient investment portfolio. As a reminder, always conduct thorough due diligence before investing your hard-earned cash in stocks or the market. Don't forget to show your support by liking this video and subscribing to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thank you for watching, and may your investments thrive in the years ahead.